PSU Steelmaker Steel Authority of India's fourth quarter numbers were largely in line with expectations. We did see a revenue growth of close to 45%, aided of course by the hike in steel prices and the fact that volumes as well picked up very smartly. In fact, they were beyond 4 million tons in the quarter gone by. However, the Ebitda was where we saw a bit of a hit. In fact, there was a bit of a decline compared to the corresponding quarter. It came in at about 6,150 crore rupees. Now, the key reason behind this decline in Ebitda, despite the fact that steel prices had surged quite significantly, was adjustment of a wage revision provision. This time around, the company had taken an all-inclusive provision for a revision in wages and salaries, which was a little over 1,100 crore rupees. Now, this is also obviously going to lead to a surge in employee costs as well for FY22, for FY23 as well. So accordingly, one must keep note of this fact that employee costs could be a little higher in the forthcoming fiscals. Now, along with that, we also could be seeing the possibility of higher CAPEX. This is something that Steel Authority of India could be doing. We are at peak spreads as well, so this is going to be interesting. The pace of deleveraging, given the CAPEX programs, will take time to ramp up. There's limits. It limits the downside risks as well to an extent, unlike the past steel cycles. Now, net debt. Let's talk about that. The entire deleveraging exercise. The net debt has reduced by close to 16,100 crore rupees to 35,300 crore rupees. Now, according to analysts, if this controlled CAPEX trajectory is followed, they can further reduce the net debt to Ebitda. Currently, it is it's a little over 1, but it can be brought down to 0.7x. So, that's of course about the numbers. And finally, we had the profit after tax coming in, the adjusted profit after tax, mind you, at 3,636 crore rupees, because there was an exceptional item of around 167 crore rupees that was incurred by the company. In terms of other figures, realizations, of course, a big surge, almost a 24% year-on-year surge at 53,528 crore rupees, and a sales volume, like I mentioned, 4.4 million tons versus 3.7 million tons. Now, a very interesting report on ICICI Securities. They've actually downgraded SAIL from hold to a sell because they believe that it looks like, according to them, the EBITDA was very, very low. Plus, now you have to face the headwind of higher employee costs as well, along with higher CAPEX. So from here, we could be seeing perhaps more outflow coming in for SAIL. So they have downgraded to a sell with a target at 99 rupees per share. That's unchanged. They say that notwithstanding the present earning scenario, we ascribe a 0.55x PB to FY23, and that volume assumptions for FY22 are also at risk given a weak Q1 FY22. And given the fact that we are at peak spreads and the cycle now is 5 quarters long, according to them, caution is warranted.